Well, as a trader, you probably watch one market to see what effect it may have on another. We're talking with Patrick Ceresna today about that. Patrick, thanks for being here.
Thank you.
All right, let's talk about specifically the relationship between the U.S. dollar and commodity prices.
Absolutely. The U.S. dollar has a very dramatic impact and a very strong inverse correlation to commodities. And one of the predominant things that we've seen, for instance, is that the U.S. dollar has had a very significant weakening effect over, let's say, even the last 10 years that has allowed so many commodities, and especially precious metals and other things like that, to have very strong, robust rallies over a very big picture time frame. But there's also a lot of day trading application or very swing trade intraday type of correlations. As the US dollar is weakening, it takes more of those US dollars to buy that commodity, and therefore the commodity prices actually will increase as the US dollar is weakening. And it's very important to respect that relationship.
Is there a strategy where I could maybe see the U.S. dollar weakening or strengthening and then have a strategy with, say, a gold ETF that I could play?
Absolutely. That's one of the key things that we actually do at E-mini Source is try to understand the market in the bigger picture. When you understand the capital markets as a whole and you understand why this is happening, and the currencies are driving the commodities, which are driving the bonds, which are affecting the stock markets in all sorts of ways. And when you start to understand the whole market and the capital markets as a whole, it allows you the opportunity to know where you should be trading, what you should be buying, how you should actually trade it.
Now, are there times when these will actually move together and they'll maybe decouple and then start to move apart? I mean, how do you know what environment you're in?
There is always going to be unique variables associated with each commodity. Like, for instance, natural gas has not had a very good correlation to the dollar because there's some fundamental issues associated with natural gas. But if you take the commodity as a whole and understand, let's say, the CRB index, or you can then see how it's affecting oil prices, whether it's food prices, whether it's prices on precious metals, metals like copper or any of those types of markets.
All right. Now, if I'm a long-term investor, I can obviously use this for a long-term plan. But what if I'm a day trader? Can I use this 5-minute chart of the dollar and a 5-minute chart of gold?
Absolutely. And one of the things that we do is when we actually trade any commodity, we always, let's say, keep a chart of the US dollar index up beside it. You don't want to fight the currency. The best moves and the most profitable moves will always be when the markets are all sort of moving in sync and in unison within the currencies. If you're taking a trade on a commodity and you don't understand how it's relating to the currency, if the currency is not confirming the move, you might be profitable, but you're not going to get it more often than not a very good trade.
Patrick, thanks for your time.
Thank you very much.
You're watching the MoneyShow.com video network.